Okay, guys, today we will start with a very important chapter called as Advanced Variances. Okay, very important and very easy also. Advanced Variances, very easy, very important. Understood. Have you learned basic variances anywhere? Which subject? Strategic management. Okay. You forget everything. We will learn everything from scratch. Don't get confused. There are various ways which you can do a question. We will you forget everything. Just forget everything. We will do from scratch. So put it at this side now. This side. Okay. Okay. Listen. You're starting a business. What and all costs you will incur? Variance can happen in two things. It can happen in your cost. It can happen in your sales. Later, it can happen in your cost. But enough. Some more. It can happen in your cost. It can happen in your sales. What and all costs you will incur in a business? Main costs. The cost. What and name the cost. First, the material. Every business material is a main cost. Second, labor cost. Third, variable cost. All the other costs will come under variable cost. All other costs will come under fixed cost. So, four main costs were incurred in a business. Okay, cost we will classify into material, labor, extra other variable costs, and other fixed cost. And sales. These are 5 things which mainly happens in a business. We will start with material. Material differences than what we had earlier thought. That is, first, we are starting a business. We have put price of our product now. Suppose you are using cost plus pricing method. We are using cost plus pricing method. In cost plus pricing method, how will you find price of a product? Cost plus price. You will find you'll have a target cost or whatever. To that you will add your profit and then you will find the price. So what happens is, I would have thought my material cost based on my standard, this thing, whatever generally happens based on the industry, I would have thought my material to be 20 rupees per liter. But material comes out to be 22 rupees per liter. Is it bad or good for me? Tell me all of you. So tell all of you. 20 is what I thought would actually come. But when I start my business now, material cost I finally realize is 22 rupees. Is good or bad for me? Bad. I expected the material cost to be 20 rupees, but my actual material cost came out to be, when I went and bought in the shop, the material cost came out to be 22 rupees. It is bad by how much? 2 rupees. I used 100 liters of material or 100 kgs of material. What are the total extra costs which incurred for me? 100 into 200 rupees. How much kgs I used actually? 100 kgs I used. How much extra it came up to? 200. Sorry, 2 rupees per 2 rupees per kg. So total my extra cost came up to 200. Is it bad or good for me? Bad. Now I expected the cost to be 20 rupees, and my actual cost came out to be 18 rupees. Is it good or bad for me? By how many kilos? By how much rupees? 2 rupees. 2 rupees. I actually used 100 kilos. So how much it is good for my business? 200. 2 into 100, 200 rupees. This is what we will do in all variances. No formulas you have to mug up. The only thing you have to mug up is something called, not mug up. Only thing you have to know something called as a mantra called as AQSP. You first tell this, then I will tell you what it means. Very important mantra which you will use throughout the entire chapter. Tell me, what is the mantra? 2 mantras you will know, like how we have mantras in every other chapter. In this chapter we have first mantra called as AQSP. Tell all of you. AQSP, that is actual quantity standard price. Tell all of you. Actual quantity standard price. So what do you mean by this? Why actual quantity standard price? I will tell you. First, material having some variance now. We'll derive the formula. How we found out 200 rupees? What are the 20 rupees we took? What are the 20 rupees we took? Standard price. On a standard, how much by 1 kg should be? 20. Standard price. So standard price, you minus it with actual price. Actual price came out to be 22 rupees. That is the actual price. You multiply it with what? 100 kilos. That is what? Actual how much we used in the business. Actual how much we used in the business. Actual quantity how much we used in the business. Multiply by actual. This is called as your material price variance. Your variance is happening because of price. Understood? Move it side. Let she'll come this side. Konjo. Enough. Move you move your side. Okay. Understood? So what is material price variance? Because of price, what variance are you getting? Remember the example. 20 rupees is what? Standard price minus actual price into actual quantity. Very important. The standard price is standard price per unit, actual price standard price per unit, total standard price per unit. Always inside, always it is per unit. Standard price minus actual price into actual quantity. So the mantra AQSP is there now. Outside, what is there here? Outside, and inside brackets we have price. Inside brackets we have price. Leave that. Outside what do we have? Quantity. Outside we have quantity. Whether that outside whatever we have, whether it should be actual or standard, for that only using this mantra. Outside if we have quantity, it is actual quantity. Outside if you have price, you have to put standard price. In exam, students get confused. Outside one is something they'll put actual price, standard price, they don't know. Outside what is coming? Quantity is coming. If quantity is coming, you have to put actual quantity. Outside if price is coming, it's only for outside. Outside what you have to put? Outside you are putting quantity. So quantity, what quantity you have to use? Actual quantity. Outside if you have put price, what you have to put? Now, to produce 100 kilos, I should have technically used 20 kilos paneer to produce 100 kilos of some dish, some output, 100 kilos output, 100 plates, 100 kilos. To produce 100 plates of paneer Manchurian. To produce 100 plates of paneer Manchurian, I should have used how much kilos paneer? 20 kilos. To produce 100 plates, I want 100 plates paneer Manchurian. To produce 100 plates paneer Manchurian, I should have used how much? 20 kilos paneer. That is standard. But I used 21 kilos of paneer. How much I should have used? 20 kilos of paneer I should have used. I used 21 kilos of paneer. Is it bad or good for my business? Bad for my business. How much bad? How many kilos I wasted? 1 kilo extra I used. What is the standard price of the paneer I have to see? 1 kilo extra paneer I used. What is the standard price of the paneer? Suppose the standard price of the paneer is 100 rupees. So what is my total extra wastage? 100. 1 kilo I wasted into 1 kilo standard price is 100 rupees. So my wastage is 100. So now you tell me the formula. What is 20 kilos? Standard quantity. On standard to produce 100 plates, I should have used 20 kilos. 20 kilos is standard quantity minus 21 kilos is actual quantity. You multiply by multiplying it by standard 100 rupees per kilo. That is price. So price means outside means you have to use standard price. So the formula is standard quantity minus actual quantity into standard price. It can be both good and bad, both. So here you are using standard quantity is for 1 unit total. Total. If you are finding a standard quantity, total 20 kilos you are taking. No. For 100 outputs, 100 output, what is the kilo we are using, you are taking. For 100 output, what is the actual we use, you are taking. Understood? So very, very, very important. Now you tell me, for 1 kilo, for 1 plate of paneer Manchurian, I should have used 0.3 kilos of paneer. For one plate of paneer Manchurian, how much I should have used? 0.3 kilos of paneer. For 100 plates of paneer Manchurian, how much kilos I should have used? 30. 0.3 into 30. I should have used 30 kilos of paneer. But actually, I used 0.4 kilos of paneer. How much I used in total? 40. 0.4 into 4. So, how are you finding standard quantity or actual quantity? What? How are you finding standard quantity? What multiply by what? What is 0.3? What is 0.3? Exactly. 0.3 is standard quantity required per unit. So 0.3 into 100, if you put what you are getting? Standard quantity for your actual output. My actual output is 100 rupee, 100 units. For that standard, how much you should have used? So in the exam, if standard quantity is given, everyone will make a mistake. You have to be very, very careful. Standard quantity means standard quantity for actual output. Tell all of you. Quantity for actual output. Both are different. This quantity is material. Output is output. Standard quantity means standard quantity for actual output. That is your second mantra. Tell what is second mantra? Standard quantity, actual output. Standard quantity for actual output. What is the first mantra? Outside of quantity comes what you have to take? Actual quantity. Outside of price comes what you have to take? Standard price. What is your material price variance? Material price is compared to price. What to price? Standard price minus actual price into actual quantity. Standard price minus actual price, you multiply by quantity. If inside price is done, outside multiply by quantity. What quantity you multiply by? Actual quantity. Inside is quantity is done, outside is multiply by price. What price means? Standard price. Tell me what is the material price variance? Standard price minus actual price into actual quantity. What is material quantity variance? Standard quantity minus tell standard quantity. Standard quantity minus actual quantity into standard price. When you tell standard quantity, inside your mind you should tell that standard quantity for actual output. An exam, what students will do, they will take the standard quantity for standard output. On standard you have to produce 200 units, that one you should take. For actual output, how much you should have used, that one you should compare now. For actual output you should have used this much, but for actual output you actually use this much. These both only you have to compare. Understood? So this is what are two mantras? AQSP. Second mantra is standard quantity for actual output. AQSP's outside if quantity comes you have to put actual, outside if price comes you have to put standard. Understood? This is what you have to know in standard costing. Material variance. So material, what are the two variants under material variance? One is material price variance, material quantity variance. Material quantity variance here we will call it as material usage variance. Usage is the most appropriate word because how much we are using we are seeing. Whether we are using extra or whether we are using less we are seeing. So second word, instead of using quantity we will use material usage variance. So what are the two variances under material variance? Material price variance and material usage variance. It can be both good and bad. It can be both good and bad. Both. If we get for lesser price, it is good. If we use less quantity, it is good. So it can be both good and bad. If it is good, we will call it a favorable variance. Both are variances. Both has varied from our actual. Actually, we would have thought something, but in both cases it has varied. Something would have gone above, something would have gone lesser. In both cases it varied. Understood? But the difference is what? Final answer, you already get the answer. When comparing standard minus, you'll get positive or negative. If it is positive, it is good to you. That is the variance. The comparing standard, it's supposed to be 200, actual is 100. The comparing to variance, so you'll automatically get the answer. If it is positive, it is good to the business. If it is negative, it's bad to the business. If it is okay, if it is good now, it is called as favorable variance. It's still a variance. Favorable variance. If it is bad now, it's called as adverse, not unfavorable, adverse variance. If it is good variance, it's called as favorable variance. If it is bad variance, it's called as adverse variance. One question you'll do, you'll understand everything very, very thoroughly. Believe me, one mistake all students make is they make in standard quantity. Through this chapter it comes. Every student they'll make in the standard quantity part. Be very, very careful when writing standard quantity. Come to test understanding question number 2. Go to advanced variances. Come to tested understanding question number 2. Tested understanding question number 2. What are they given? What are they given? 2 kg of material. What is it? First read properly. If someone makes the single product with the following budgeted material cost per unit. So they are saying 2 kg of material A at 10 per kg. What does it mean? Leave everything. What is the 2 kg of material A at 10 per unit? What does it mean? 10. I don't want complicated words. I just want to know what does it mean in simple terms. What is the 2 kg? What is the 10 rupees? Tell us, huh? 10 rupees per kg. What is the 2 kg? For what? What is the 2 kg? Compare it with what example I gave. How much I told? How much I told? Not that. 0.3. What is 0.3? 0.3 paneer is required to make 1 plate of paneer Manchurian. Like that, 2 kg of material A is required to make per unit. To manufacture 1 unit, we need 2 kgs of material A. And 1 kg of material A is supposed to be 10 per kg. Both are standard. On standard, we are supposed to use 2 kg of material A to produce 1 unit, and the material A will cost 10 rupees per kg. Understood? This should be, I should analyze a question like this. What is our output? 1000 units we produced. Okay. What is material purchased and used? 2200 kg. What is that? Actual material used. That is our actual quantity. 2200 kg is actual quantity. Always actual quantity, mostly they will give in the question. Total actual quantity, they will actually give in the question. So what did you listen to me before doing anything? Analyze what we'll analyze from this. When you compare two price, you are taking total price, price per unit. Now in the formula. In the formula, we took total price or price per unit. Per unit. Standard price per unit, actual price per unit. We took quantity, you took total quantity or total quantity. Understood? Okay. So material price, what is 2200 kg is actual quantity used. What is material cost? What is that? 20,900? Actual material cost. Understood? Actual total material cost. Calculate material price and material usage variance. We'll go one by one. You don't write anything, first listen. Material price variance. What is the formula? Material price material price variance. Price is, you are comparing two prices. Standard price, actual price into quantity. What quantity? AQSP, actual quantity into actual quantity. We'll go very slow. Standard price is how much? Outside you're multiplying by quantity, no? Wait. Outside you're multiplying by quantity, no? That quantity is your raw material quantity or is it your output? Outside you're multiplying by quantity, is it your raw material quantity or output? Think and tell. While doing material variance, why will we take the output quantity? We will take the material quantity. Quantity, there are two quantities. Quantity of material, quantity of units. Here talking about material, why you are talking about units? Units is the output. Units means output. Here you are talking about output. When you are taking the standard price, you are taking the price of material A. Actual price, you are taking the price of material A. So you have to multiply that by materials quantity only, no? Yes, sir. Understood? Here you are talking about material. So everything is related to material only. The quantity is the material quantity, not the output quantity. Output quantity will not use here. Understood? Output quantity will use only for finding the standard quantity. Understood? Okay. What is the standard price? Standard price is 10 per kg. So when you are multiplying by output, what are you multiplying by? No, you are multiplying by quantity, no? When you multiply by quantity of material, you have to take the price of material. What some students will take is they will take 20 rupees, 10 rupees per kg. For 1 unit we need 2 kgs and they will take 20 rupees. Should take only 10 rupees. Now outside we are multiplying actual quantity is kg or units. Actual quantity is kg or units. So we will multiply per kg rate only. Outside quantity is 2000 kg. Oh, sorry, first tell me what is the actual quantity? Look at the question and tell me what is the actual quantity. 2200 is the actual quantity, 2200 kg. Now you multiply with 2200 kg. So you have to take the price per kg only. Students will be smart, try to be smart and they'll take the price per unit. When multiplying by the kg, 2200 kg, you have to take the price per kg only. What is standard price per kg? 10. Standard price per kg is 10. Minus, what is the actual price per kg? First we calculate. 9.5, yeah. How we got 9.5? Sir, total actual cost for material is 20,900 divided by, I bought 2,200 kgs. So per unit cost is, per kg cost is 9.5. Don't use per unit. You should use per kg only. When you're telling only, if you tell it's per kg, in an exam you'll get confused. We'll do a lot of questions, eventually you'll get better, but I'm saying it will be very, very careful. 9.5 per kg. Now how you found out? Total actual cost is 20,900 divided by, you bought and used 2,200 kg, 20,900 divided by 2,200 kg, you got 9.5 per kg. So 10 minus 9.5 is 0.5 into 2,200 is 1,100 per 1,100 is the total variance. Is it a favorable variance or adverse variance? For two ways in which you can tell favorable variance. First, you are getting a positive value, so the favorable variance. Second, you are getting comparency. Standard is supposed to be 10, but actual is 9.5 only. Actual is lesser, so it obviously should be a favorable variance. This is how the question should be approached. Why I am going very slow and very deep in this? Because outside actual quantity, sometimes students take actual output. We are not talking about output only. We are talking only about our actual quantity of materials used. When you multiplying the actual quantity of material used, you have to take the cost of material only. Material cost per kg is 10 rupees. Understood? You can compare kg cost into kgs you can do. You can compare output cost into output you can do. You can mix both and do. Understood? Now, same way material. One more way of doing this question I will tell you in exam also in case you get confused. What is the formula for material price variance? Material, no, not mantra. Material price variance. Formula. Standard price minus actual price into actual quantity. Outside quantity means actual quantity. Again, tell what is the price. So what is the formula for material price variance? Minus actual price into actual quantity. Take it inside and tell me what will be the formula. Standard SQ. SQ will not come here only. Where did SQ come from? Standard price into actual quantity. I am bringing the actual inside. Minus actual price into actual quantity. Now you try to do the question. What is the standard price? Standard price per kilo is, be very clear. Standard price per kilo. Tell per kilo is 10 into actual quantities kilo. How much is the actual kilos? 2,200. So 10 into 2,200 minus actual price into actual quantity. They directly gave it as 20,900. Actual quantity and actual price, they directly gave it as 20,900. So minus 20,900 you can directly do and also do. Same answer only you will get 1,100 favorable. You can use any method you follow. I suggest always the first method to not get confused in exam. But first of all, what the difference is? To find the actual price, you have to divide the 20,900 divided by 2,200 kg. If you do, you will get the answer. Understood? So now, same way, I will come to material usage variance. Then I will give time to do. Material usage variance first. Tell me what is the formula? Material usage variance. Here we compare quantity. Standard quantity, actual quantity, standard quantity minus actual quantity into price you have to do. Into standard price. Outside AQ, SP. Price means standard price. What is standard quantity you should have used? What is the mantra for standard quantity? Quantity for actual output. What is standard quantity per unit? 2 kg. Into actual output is how much? 1000 units. 2 into 1000 is? 2000 kilos is what you should have used. Minus what you actually used? 2200 is what you actually used. Minus 2200 into what is the standard price per kilo? 2000 and 2200 is kilo or units are? Kg only. Always material will be kg only. Whatever you do, material inside will be kg only. To find the standard quantity alone, we use the actual output and find the standard quantity. But always quantity will be kg only. Into what is the standard price per kilo? 10. 2000 minus 2200 into 10, how much you will get? Minus 200 into 10, you will get 2000. 2000 negative. That is adverse. 2000 adverse. You don't have to write negative, positive and all here. You can directly write 2000 and you can write A and round. F and round. F means favorable. A means adverse. Understood? This is how material price and material usage should be found out. Please take 2 minutes time and do the question. Don't see anything, don't see the answer, do the question. Do test understanding question number 2. Fast. Do test understanding question number 2. Work out test understanding question number 2. Find the material price variance, find material usage variance. First, don't discuss, try to work out, make a mistake and then you discuss. First, work out the question, make a mistake and then you discuss. Do it fast. Just write in rough. Do it fast. Don't write full standard price, actual price. Write SP minus AP. More than enough. Standard price means SP, actual price means AP, actual quantity means AQ, standard quantity means SQ. Okay, I'll tell you. What is material price variance? What is material price variance? Standard price and my actual price. We are comparing a standard material price. Standard material price should be 10 rupees per kilo. Actual price into actual quantity. What is standard price in this question? Standard price 10 per kilo minus what is actual price? 9.5. 10 minus 9.5 is 0.5 rupees per kilo into what is actual quantity? Actual quantity of material 2200 into 2200. 0.5 into 2200 if you do, that is material price variance. 0.5 into 2200, that is 1100. That is material price variance. Is it adverse variance or favorable variance? Favorable. It is supposed to be 10, but it is 9.5 only. So 1100 is favorable variance. What is material usage variance formula? Actual quantity into standard price. Standard quantity, what is the mantra? Quantity, what is the mantra? Standard quantity for actual output. Standard quantity we were supposed to use for actual output. Okay, how much is standard quantity we should technically use per unit? 2 kilo. How much we actually we produced? 1000 units. So 1000 into 2, 2000 kgs is what we are supposed to use. That is standard quantity. Minus what is the actual quantity? 2200. We are supposed to use 2000. Minus 2200. We use 200 extra into standard price. What is standard price per kilo? 10. 200 into 10. 2000 rupees adverse variance. That is material usage variance. 2200 adverse is material usage variance.
So standard quantity is equal to
Standard quantity for actual output.
or actual.
How much we are supposed to use for actual output we produce.
Standard quantity per kg.
Always kg only.
Per kg or kg?
Total kgs. Standard quantity is total kgs. Price will take per, but standard quantity will take total kgs. To produce the 10 plates of paneer manchurian, I should have supposed to produce 1 plate of fried rice will be manchurian. To produce 1 plate of fried rice, I was supposed to use 2 kgs of paneer. To produce 1 plate of fried rice, I was supposed to use 2 kgs of paneer. I produced 1000 units of fried rice. How much paneer I should have used? 1000 into 2, 2000 kgs of paneer I should have used. But I technically used 2200 kilos of paneer. I used 200 kgs extra. Per kg paneer costs how much? It should standardly be 10 rupees. So 200 into 10, 2000 rupees is my material usage variance adverse. Material usage variance adverse is 2200 rupees. Material price variances 100 favorable. Understood? Totally, on a total basis, is it bad or good for the company? Total basis. How bad by how much? 900. Bad by 900. Because price, I am saving 1100 rupees because of price difference. Because of quantity, I am losing 2000 rupees. Technically, I am saving 900 rupees. So, technically, I am losing 900 rupees. So, total material variance is 900 adverse. When you add these both the variance, you get the total material variance. Material price variance plus material usage variance, you will get your total material variance, that is 900 rupees adverse. Understood? Understood? Sorry? How much we used to produce 10 plates of fried rice? I should have used 2000 kilos of paneer. But how much kilos of paneer I used? I used more paneer. My material cost became more. I used more paneer. No, 200 kilos more paneer I used. I should have used only 200 kilos, but I used 2200 kilos. 200 kilos extra I used. For that, whatever is cost, that is my loss. Understood? All other variances we are going to see from now on. All other variances which we are going to see is a part of this. No new formulas. No new formulas we learn for next, at least for next 40-50% of the concepts we are going to use. We are going to see no new formulas we will see. With this formula, we will derive other formulas. Understood? Understood, all of you? So, what is material price variance? Actual price into actual quantity. What is the answer you got? Answer 1100 favorable. What is material usage variance formula? Standard quantity minus actual quantity into standard price. What is standard quantity mantra? Quantity for actual output. Understood? What is the answer you got? Adverse. 2000 adverse. What is the total material variance? Material price variance. First tell material price variance plus material usage variance. What is material price variance? 1100 favorable. What is material usage variance? 2000 adverse. So what is the total material variance? 900 adverse. Understood. So material. Why are we finding this chapter? Why are we doing all this? Is because every business should technically do this. That is when they know whether they use more paneer, less paneer, whether they bought for more price, less price, and then they can go ask the chef. Once they find this, we'll go ask the chef. You should have used only 2000 kilos of paneer. Why did you use 2200 kilos of paneer? You give me that explanation of the extra 200 kilos of paneer. You can go ask the chef. Understood? Same for price. Here, price is good. The manager is supposed to get 1 kilo paneer for how much? 10 rupees. But he actually bought it for 9.5 rupees. He'll give him bonus because of that. As he reduces the paneer cost per kilo, he negotiate with the supplier. He'll go and give him bonus. Understood? This will not be used to assess that. Yes or no? Can we proceed? Now, coming to next is labor variance. Labor also, again we will have two variances. labor price variance, labor quantity variance, usage variance. Labor, same, labor price variance. Labor, words will change later, but for now you remember labor price variance and labor usage variance. What is material price variance formula? To actual quantity. Here what might be the formula? Standard price minus actual price into, we will not tell quantity, we will tell hours. What hours, sir? Labor will come as hours only, no. Suppose actual hours or standard hours, what? I'll tell the first the price. Standard price or actual price, what it means is, what is the price we are paying per hour to the labor? You tell me, per hour my labor cost in the market is supposed to be 20 rupees per hour. I actually paid only 18 rupees per hour. Is it good or bad to the business? Good to the business. I paid less when I should have paid 20 rupees per hour, but I paid only 18 rupees per hour. It's good to the business. Labor was supposed to work for 200 hours, but he actually worked only for 180 hours. Is it good or bad to the business? Good or bad to the business? Huh? Labor, I produce 100 plates of fried rice. To produce that 100 plates of fried rice, labor should have actually been 200 hours. But my chefs completed the work in 180 hours. Is it good or bad to my business? Why is it good? Because 20 hours I can pay them less. Earlier I paid them for 200 hours. I should have paid them for 200 hours, but I paid them only for 180 hours because they complete the work faster. Good only for the business? No. That is what we are going to see in this labor variance. What is labor price variance?
Standard price minus actual
Price into actual hours. That we use quantity, here we will use hours because how many hours they work we will see. But price, that is what the earlier, when they introduced this chapter, that's what was the formula. When they introduced the chapter, the formula was standard price minus actual price into actual hours. But what happened is, then they realized setting a price tag for a human being didn't look good. They are not slaves. They are not slaves. They are also human beings. So setting a price tag for human beings didn't look good. That's why they introduced a term called as rate. For quantity, for this you can tell price is 5 rupees. Can you see that person and tell his price is 500 rupees? So that's when they introduce it called as rate. They don't call that price, they call it rate. They don't call it as my labor rate is 100 rupees per hour. Their labor price is 100 rupees, like that they will not tell. They will tell labor rate is 100 rupees per hour. So we call them in terms of rate. Understood? We don't call it in terms of price, we call it in terms of rate. Understood? So now tell me the formula. Standard rate minus actual rate into actual hours. Standard rate is total rate. What rate? Per hour. Standard rate per hour minus actual rate per hour into actual hours. What is labor usage variance? Standard hours. Same. Standard hours minus actual hours into standard rate. Outside rate or price, whatever comes, it will be standard. Outside if quantity or hours comes, it will be actual. So standard hours minus actual hours into standard rate. Standard hours is how many hours he should have worked, but he actually worked only for less hours. It is benefit to the company because I should pay him less into your standard rate. What is the variance called as? This was the name earlier. Earlier, like old times, they used to say how much you use the labor. But after that, they realized it is not good to talk in that way. After they realized it is not good to tell that how much labor we use today. That's when they introduced a term called as efficiency. How efficient was the labor? That person was supposed to complete in 200 hours, but he completed in 180 hours. So instead of labor usage variance, the better word to use is labor efficiency variance. How efficient he was. Now he is also a human being. So treat him like human being. We can't call him price. We can give him a call as rate. We can't call how much we used him. We can tell how much efficient he was. Word is very, very important. So labor, what are the two variances? Labor rate variance and labor efficiency variance. What is labor rate variance? Standard rate minus actual rate into hours. What is labor efficiency variance? standard hours minus actual hours into per unit. To produce per plate of fried rice, I should have used 2 hours. To produce per plate of fried rice, the labor should have used 2 hours. How many hours I should have used if I technically produced 100 plates of fried rice? Huh? 200. To produce per plate of fried rice, I should have used 2 hours. The labor should have used 2 hours to make 1 plate of fried rice. 100 plates of fried rice, how many hours he should have used? 200 hours. He completed the work in 180 hours. He completed the work in 180 hours. This is good or bad to the business? Good to the business. Into multiply by standard rate you are paying him per hour. This is the formula for labor efficiency variance. Understood all of you? Here also that mantra you will use. Standard hours is what is the mantra? Standard hours for actual output. Standard hours is 2. Actual output is 100. Standard hours for actual output. Understood? Now this question I will not do. Go to test and understanding question number 2 and you try to do the question. Only thing, go to question number test and understanding question number 3. Only one thing I will help you. Actual, you first tell this solve to me. What is the actual rate per hour? See test and understanding question number 3 and tell me what is the actual rate per hour. Look at the question and tell me what is the actual rate per hour. Actual rate per hour. 70? How do you find 72? Which question you are saying? How you got 72? 4.5. So total cost I paid my labor is how much? Total direct wages is 69,750. Okay, how many hours did he work for? Divided by 15,500. You got 4.5 rupees per hour is the actual rate you paid. Now you find out labor rate variance and labor efficiency variance. Find labor rate and labor efficiency and tell me what is the labor rate variance and labor efficiency variance. Before proceeding, don't write 1 second, don't write. Again, tell me the formula for labor rate and labor efficiency variance. What is labor rate variance? Rate minus actual rate into actual hours. What is labor efficiency variance? Standard hours minus actual hours into. Okay, now you can proceed. Tell me what is the labor rate and labor efficiency variance. What is the labor rate variance? 4,650. How have you got? Any different answer? What do you got? 2,400.
cost per actual output. Why is it 15 into 1000? I can't understand 15.
I'll tell you. What you got is labor efficiency variance?
4,400 adverse. 2,400 adverse.
15,500. Correct. You're asking why you're taking 1000 into 15 hours, correct?
15 into 1000.
15 to 1000. Actually, how many hours did you use? My labor work for to produce per unit, how much hours you should have used? What they given the question is extract from the standard cost card. So the thing which you're seeing above, no, only the above part, 72 rupees is there, no, that is the standard cost card. What they've given is to produce per unit we need 15 hours and standard rate per hour is 4.8 hours and total cost is 72 rupees to produce per unit. So the 15 hours is what is to produce per unit. That 4.8 is the cost per hour. So that is standard rate per hour. So standard hours we should have used is 15 hours is per hour per unit. We produced 1000 units. 1000 into 15 we should have used 15,000 hours, but the labor actually worked for 15,500 hours. They worked for 500 hours more. Into standard rate per hour is 4.8 rupees. 500 into 4.8 we have to technically pay them 2,400 rupees extra. 2,400 is adverse labor efficiency variance, and I'll do it again. Do the question again. What is labor rate formula? All of you tell me again. Standard rate minus actual rate into actual hours. Standard rate is what?
4.2.
Standard rate per hour is 4.8 into actual minus actual rate is
4.5.
4.5. That is 69,750 divided by 15,500 is 4.5 into actual hours is 15,500. So 0.3 into 15,500 is 0.5 into 0.3 into 15,500 is 4,650 is your what variance? Labor rate variance, which is favorable. Favorable, put F with the 0 round. Next, what is labor efficiency variance? Standard hours minus actual hours into standard rate. What is standard hours? Standard hours for actual output. Standard hours per unit is how much? 15. And actual output is 1000. 15 into 1000 is 15,000 hours. Minus actual hours is 15,500 hours. Into standard rate per hour is 4.8. If you do that, you will get 2,400 adverse. What is the total labor variance? Add both. Total labor is 4,650 minus 2,500. You have 2,250 is your positive variance. Total labor variance 2,250 positive variance. Understood? Yes or no? This is what is your labor variance. Understood material variance? Understood material variance? Understood labor variance?
Yes, sir.
Variable overhead variance we will see. Now we are going to see something called as variable overhead variance. Variable overhead, you will see traditional costing methods. When you take traditional absorption costing method, when we take, it was majorly what intensive? Material intensive or labor intensive? Traditional absorption costing method, when you take, it was all labor intensive earlier. So everything will be counted in terms of hours only. Variable overhead variance we are going to see now. We are going to see variable overhead variance. Majorly labor hours only we will see. And units. If not units. Why labor hours we will see is, earlier all products they manufacture, they also manufacture with hand only. So it would be better this thing if we took everything based on hours. Understood? Instead of taking respective cost drivers, earlier they used to take only hours as the main cost driver and they used to find out. So variable overheads, the formula is exactly copy paste as labor variance. Before going there, don't open and see. You tell me what might be the two variances under variable overhead variance. Update copy paste. Two variances under variable overhead variance. Variable overhead rate variance, variable overhead efficiency variance. What might be variable over rate variance?
Standard
Tell. Standard rate, actual rate into actual hours. What will be variable over efficiency variance?
standard hours minus actual hours into standard.
Exactly the same. Now come to variable over and see. Instead of rate variance, we call it expenditure variance. Variable over, we don't give rate to anyone. How much is our expenditure we will see. So we will find variable overhead expenditure variance and variable overhead efficiency variance. We will find variable over expenditure variance, variable overhead efficiency variance. The formula remains the same, no change in formula. What is variable over expenditure variance? Expenditure rate, standard rate minus actual rate into actual hours. What is variable over actual rate? Actual hours only. What is variable over efficiency variance?
Standard
Hours minus actual hours into standard rate. All same thing we will use that. No difference. Exactly the same thing we will use. Understood? Come to test your understanding question number 4 and directly try to do the question. Come to test your understanding question number 4 and directly try to do the question. Same thing, don't get confused. Exactly the same thing. They're asking for variable over expenditure variance. Variable over expenditure variance is exactly the same as variable over labor rate variance. And variable over efficiency variance is the same as labor efficiency variance. Same question, try to do it. What is variable over expenditure variance?
620 favorable.
Okay. What is variable over expenditure variance? Efficiency variance?
500 adverse.
You already get the same answer. You don't have to write entire standard rate and all. Just write SR, SH, AHAR. Take 2 minutes time and discuss the question fast. Then we can proceed next question. Okay, first I will do, then you discuss. First I will do, then you can discuss. Okay. Now, first the variable overhead expenditure variance. What is the formula? Standard rate minus actual rate into actual hours. What is standard rate per hour? 1. Minus what is the actual rate per hour?
0.96.
How we found out? 14,900 divided by 15,500. That is 0.96. It is advisable to take in this part alone. It's advisable to take 4 decimals. This advisor will take 4 decimals, 0.9613. Okay, into what is the actual hours? 15,500. Multiply and tell me. That is 600. 600 is your favorable. How much you got? You got? Or one more additional thing to do is, in Excel when you are doing, no problem. You take unlimited decimals. Excel don't round off and all. In Excel when you are doing, take unlimited decimals. 1 minus, don't copy paste and it 0.96. In brackets you put 14,900 divided by 15,500. After you will get the round of, you will get the entire amount. Take that and you will get exactly 600 rupees. Okay, that is variable over expenditure variance. Variable over efficiency variance, what is the formula? Standard hours, actual hours into rate, into standard rate. What rate? Actual standard rate. What is standard hours? Standard hours for actual output. Standard hours per unit is 15. Actual output is 1000. 15 into 1000 is 15,000. Minus actual hours is 15,500. Into standard rate per hour is 1. 500 into 1 is 500. That is also adverse. Variable load expenditure variance is 600 favorable. Variable efficiency variance 500 adverse. What is total variable load variance? 100 favorable. That's it. Understood all of you? Now discuss. I mean discuss all the 3 questions. Go to question number 1. Go to question number 2. Discuss all 3 questions. All 3 of you discuss, here 2 of you discuss. Start with test and answer question number 2. Go to test and answer question number 2 and discuss. Come closer and discuss. Chicken. Order. No order. Today order. Frozen. Go through all 3 questions. Material variance, labor variance, variable. Because you will know now, you will forget in the next one day. But if you go through now, you will remember it better. We will see one more variance for today. After that, we will close this chapter and proceed next chapter. I don't want to confuse you more. Others are very easy. One more variance we have called as fixed overage variance. That will be slightly confusing. That we will do in the next class. Today we'll do sales variance. We'll try to do questions from this. Understood? Okay. What are the three variances, sir? Material variance, labor variance, and variable over variance. Variable over variance. Now we are going to see something called as sales variance. Before proceeding sales variance, you have to forget few mantras. Forget second mantra. Standard quantity for actual output. No. Here we are going to talk about the output only. Output here only we are going to talk about the output. Sales is your output. No. Output is what you are going to sell. So here standard quantity means standard quantity only. Here standard quantity means standard output only. Here is not standard quantity for actual output, because in sales we are going to talk about output only. Sales is output. Understood? So before proceeding to the formulas, tell me one thing. Is there anything called as standard amount I should sell? Material for this on standard I should use this. My general operating procedure is that for producing 1 plate of fried rice I should use 2 kilos of paneer. Will there anything called as on standard I should sell 500 units? What will be the better word instead of standard? Budgeted. Exactly. Instead of standard I can call it budgeted. I budgeted to sell 500 units, but I actually sold 450 units. Is it good or bad? Sir, but 500 minus 450, if you do 50, positive only is coming, no. Here the formula will change. All this while in cost when you are doing standard minus actual. In cost when you are doing everything, you do standard minus actual. Here you will do actual minus budgeted. Actual quantity minus budgeted quantity multiplied by price. This price only. How much I sold it for? What price? Standard price. Only quantity should be budgeted. Quantity you can't tell on standard I should sell this. You can tell budget is, but standard price I should sell is 200 rupees or 300 rupees. You can tell. Quantity is also standard. Quantity is budgeted. Understood? Tell the formula. Actual quantity I sold minus budgeted quantity, how much I budgeted to sell, into price. What price? Outside price comes means AQSP. Standard price should only come. Outside quantity comes means? Outside price comes means? Understood? That is also wrong. That is also wrong. They are saying how much less I sold. I don't want how much sales I lost. They are asking for how much profit I lost. That only tell me they are asking. When you multiply 50 units into per unit price, you will get how much units, how much price you sold less for. They are asking for that. They are asking how much profit I lost because of selling less. So you should multiply it by margin. Should multiply it by only the margin. I was supposed to sell, my budget to sell how much? How much? 500 units. I actually sold 450 units. 1 unit I would have got a standard profit of 30 rupees. So how much profit I lost? 30 into 50 I lost 1500 rupees. That is what they are asking. They are not asking how much sales I lost. They are asking how much profit I lost. That alone you tell me they are asking. Tell me again, what is the formula? Actual quantity minus budgeted quantity into margin. What margin? Standard margin, not actual profit. Standard margin. Margin price, whatever comes outside, that will be standard only. Multiply by standard margin. Tell again, what is the formula? Actual quantity minus budgeted quantity into standard margin. Now, I was supposed to sell it for 100 rupees. I sold it for 80 rupees. 80 rupees. Is it good or bad for the company? Bad. Actual price is 80 minus I was supposed to sell it for 100 into how much I actually sold. I actually sold 1000 units. How much I lost? 20 into 1000, 20,000 rupees I lost. How much I lost? 20,000 rupees I lost because of what? Because of what? Because of selling for less price. 20,000 rupees I lost because of selling for less price. Now tell what is the formula? Actual price. Price, it's not rate here. How much I sold? Actual price. Your price tag will be there no for amount. Actual price minus standard price. Price standard price. Actual price minus standard price into quantity. Price always will be standard only. Only quantity will be budgeted. Understood? So tell again what is the formula? Price minus standard price. So this is called as sales price variance. Another formula you saw is called as sales, not quantity, sales volume. How much you sold, volume of amount you sold, you will tell no. Sales volume variance. So this is called as sales price variance, and we have sales volume variance. And now you tell me what is sales price variance? Actual price, standard price into quantity. What is sales volume variance? Quantity minus budgeted quantity into standard margin. Two things will change there. First, instead of standard quantity, we'll have budgeted quantity. Instead of, we'll have standard margin. And they're asking because of selling less, how much profit you lost, that alone you tell me. I don't want more than that, they're asking. Tell again, don't write, I'll tell you time to write. First, tell again, what are the two variances under sales variance? Price variance, sales volume variance. What is sales price variance? Actual price minus standard price into actual quantity. What is sales volume variance? Actual quantity minus budgeted quantity into standard margin. Understood? When you don't write anything.
But no total how to answer. One is profit, other is price.
That price also, how much you lost only we are taking now. When you are comparing 100 rupees and 80 rupees, when you compare 100 rupees and 80 rupees, that is the amount of something which you lost, or amount of something which I gained. 100 rupees, I sold for 120 rupees. I sold for 20 rupees extra. That I am taking how much I gained only. The 20 rupees is how much I gained. Here quantity also, when you take how much profit you gained or how much loss you gained because of selling less only you are taking. So both are gain or loss only, technically if you see. That's it. As action is coming first here. Because actually if I sold 150 units, I budgeted to sell 100 units. 150 minus 150 I sold more. It is good for the business. Understood? For all costs you will do standard minus actual. For sales you will do actual minus standard. That is beneficial to us. So you will do the ulta thing. Understood? For sales quantity variance, for sales volume variance, two changes you have to do. Instead of actual quantity you will take budgeted quantity. Instead of price you will take margin. Understood? Sir, when we do marginal costing, in CVP analysis is marginal costing. What we rely upon majorly? Huh? We will not variable fixed. We will mainly focus on sales minus variable cost contribution. Our main word there is contribution. Entire whatever formula we will take, we will use contribution only. We will not use profit. Whereas in absorption costing, what do we take? Profit. We take sales, we take variable cost, we take fixed cost also, we find the profit per unit. That is in ABC costing or absorption costing, we take profit per unit. Whereas in marginal costing, we take contribution per unit. Again tell, in marginal costing or CVP analysis, we take, in absorption costing or ABC costing, we take profit, we find out the profit per unit. So here standard margin, you are saying no. Some companies might use marginal costing and find out their cost sheet. Some companies might use absorption costing and find out. Companies who use marginal costing, what do they rely upon? Contribution. Companies which use absorption costing, what do they do? Profit. So companies which use standard marginal costing, now for that standard margin we will take standard contribution. Companies which use absorption costing, for them instead of standard margin we take standard profit. Understood? I think in the question they'll give two things. Find out the sales variance using marginal costing method. Find out the sales variance using absorption costing method. If they tell you to find sales variance using marginal costing method, instead of the standard margin, they take standard contribution. That is sales variance variable cost. If they use absorption costing method, instead of standard margin, you take standard profit per unit. Understood? The second mantra is another. Be very careful. Standard quantity means standard quantity for actual, because the standard quantity only is not there in the question. We have budget quantity which will be directly given to us. Understood, all of you? Come to test and understand question number 2. Don't write anything. I will do once, then you can do. Don't write anything. Close your notebooks. I will do once, then you can do. Listen to me. What are they given? First line. W limit has a budgeted sales unit of 6,500. Correct? Test and understand question number 1. Test and understand question number 1. What is they given? W limited has a budgeted sales of 6,500 units. What do you mean by this? Budgeted quantity sold. Budgeted quantity is supposed to sell, but actually sold only 6,000 units. It is actual quantity. Its standard cost card is given below. That is until direct material till standard selling price is standard cost card. Whatever is given, that is standard only. Understood? Direct material plus wages plus variable overhead plus fixed overhead. Total standard cost is 55 rupees. Gross profit is 5 rupees and 60 rupees is standard selling price. And the actual selling price is 61 rupees. Okay. Calculate the sales price and sales volume variance. We'll do one by one. Using absorption costing method and marginal costing method, we will do both side by side. Okay. First, I will do absorption costing and then I will do marginal costing. First, sales price variance. What is the formula? Actual price minus standard price into actual quantity. What is the actual price I should have sold it for? I sold it for 61 rupees. At standard, how much I should have sold it? Standard selling price is 60 rupees. Standard selling price should have been 60 rupees. Into what is the actual quantity sold? 6,000 units I sold. So 61 minus 60 into 6,000, you get how much? 6,000 is favorable. 6,000 is favorable. Understood? Now come to marginal costing. Same sales price variance we'll do using marginal costing. What is the actual price? 61. What is the standard price? In marginal costing or absorption costing, there will be no difference in give me one second. There will be no difference in sales price variance. You will have difference only in volume variance, because there we are putting margin. Margin only will change. Selling price and all will not change. Any method you use, I will also sell for 60 rupees only. I will also sell for 61. The other company also sell for 61 only. My standard selling price is also 60. His standard selling price is also 60. That there will be not any change. Okay. Now tell me, what is standard price? 60 into what is the actual quantity? 6,000. 6,000. So what you are getting? 6,000 favorable. No change in sales price variance. In MCQ they will ask whether we use marginal costing or whether we use absorption costing. Sales price variance is going to remain the same. Now we come to volume variance. What is the formula for sales volume variance? Quantity minus budgeted quantity into standard margin. But we are using absorption costing method. We will not tell standard margin. We will tell standard profit. Absorption costing method, we will tell standard, instead of standard margin, we will tell standard profit. Overall, it's called standard margin. But for absorption costing and marginal costing, the name varies. For absorption costing, it's called as standard profit, because for absorption costing, we will take profit. Now tell me, what is the actual quantity? Minus what is budgeted quantity? 6,500. Into what is the standard selling price? 60 rupees. Minus 500 into 60, how much will you get? Sorry. Standard profit. Standard profit. What is standard profit? Standard profit is 5 rupees. So 500 into 5 is 2,500 is your adverse. 2,500 is the adverse sales volume variance under absorption costing method. Standard price, standard profit. SP standard profit. Standard profit is 5 rupees given to us directly. Understood? Now, marginal costing. What is the formula for marginal costing? Sales volume variance, actual quantity minus budgeted quantity into standard contribution. Instead of standard margin, we will write here standard contribution. What is actual quantity? 6,000 units minus what is budgeted quantity? 6,500 units into what is standard contribution? What is contribution formula? Variable cost. What is standard selling price? 60 rupees. What are the variable costs given to us? Direct material, direct wages, variable overheads. If you reduce all these three, how much you will get? 20? 23. So standard contribution is 23. 500 23, how much you will get? 11,500 is your adverse sales volume variance under marginal costing method. Understood all of you? Clear? Clear? Please do this question once. And then we are technically done this chapter for today. I don't want to take any more because you'll get confused. Okay. Guys, after this, we will continue this chapter tomorrow. We will do another chapter now. This chapter, believe me, the only konjam complicated, it will take 30 minutes to understand that concept. Fixed overhead variance. Once you complete that, we have a lot of other things in the chapter. Lot of everything else is very logical. Not even one point you have to mug up in the entire chapter. Everything else is super logical and super easy if you are thorough with the basics. The four things you saw is the basics. If you're thorough with the basics, everything is going to be very, very easy. Fixed overhead variance will be confusing. That we'll figure it out. These are four formulas to learn. I'll first teach you the logic for all the four formulas, and then we can mug up the four formulas. With that, we are done with the variances. Everything is going to be very, very easy. That we'll do in tomorrow's class. Now we just practice this sales variance, and then I'll tell you what to do. Practice this variance, then I'll tell you what to do.